Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, hit that subscribe button, and also the like button helps us grow the channel and also lets us know that you like the content we're putting out there. How are you today, Brian?
Doing great, Michelle. How about yourself?
Doing pretty good. Thank you. So today we're going to be talking about mutual funds, specifically mutual fund fees. And I know you're laughing because
here we go.
Here we go. Exactly. The more videos that you and I do on this channel, the more I realize just how much these tiny, often like these seem like they're small little fees. They add up, they start to compound, and they can really do a number. They eat away at the growth of your retirement, really, or your investments.
Yeah, it's hard to believe how much just a little change to that fee could do. And we're going to hit them today and just give you some ideas of what to be careful for out there and what to look for. So.
All right. So before we talk about how much our mutual funds are really costing you, let's just back it up and if you could give a brief overview of what a mutual fund is.
Okay. A mutual fund, Michelle, is an investment vehicle, usually professionally managed, that you can invest in, that purchases stocks, bonds, money market funds, and you're taking your money and you're pooling it with other investors out there to get in a larger portfolio. The money, as you put money in on a monthly basis or a big lump sum that you put into mutual funds, the portfolio manager then takes them funds and puts them to work as the objectives of the fund is met. So,
okay. All right. So let's talk about what are these fees costing people?
Yeah, and we'll hit this. I'm going to give you an example, but real quick, below this video, I'm going to put a link to the SEC Bulletin on mutual fund fees. This is a great PDF that you can download and take a deep dive into what these fees actually cost you. And it's not coming from an advisor. It's coming from the SEC, who oversees all advisors, and really breaking down what these fees actually cost you. So,
okay, fantastic. And that link will be below this video.
Yeah. So let's hit what some mutual fund fees can cost you. And you'll see this in that guide also, Michelle. The example uses a $100,000 initial investment with a 4% rate of return over the next 20 years. Okay. Pretty simple, easy to figure. And we'll start with a 25 basis point annual fee, which is 25% of 1%. So that means $25 for every 10,000 invested is what you pay annually. Okay. That investment, $100,000, 4% over 20 years with a 25 basis point annual fee, will have a total at the end of that 20 years of $208,000.
Wow.
Okay, not bad, right? But by just doubling that fee to 50 basis points, that's $50 for every 10,000 invested, you now will only have a total of $198,000, 10,000 less. Then if you double that one more time to a 1% annual fee, which is very common, $100 for every 10,000 invested, you now only have a total of $179,000.
Yikes. Okay.
$29,000 difference from 25 basis points annual fee to 1% annual fee. So you can definitely see the difference that higher fees can make on just a $100,000 portfolio. Imagine much larger accounts. So,
okay, so I want to talk about the fees in a minute, but there's nothing wrong with charging fees. It's like running a business, right? Let's just start with that. We're not poo-pooing fees. It's just you have to be careful with how much you are paying, because there is a cost and ongoing costs to running a business. Same thing with the mutual funds. But what does this look like? What is the fee breakdown? Like, what are these fees going to, I should say, when it comes to
and think of it this way. It's okay to pay fees. We pay fees for everything, right? But if you're paying a higher fee for a smaller return, that doesn't make sense. That means that fund has to really outperform the lower annual fee fund just to get your return back.
Right.
So, but let's break down some of the fees. Okay. And that's a great analogy, Michelle. This is just like running a business.
Yeah.
You've got cost that like upfront cost, you've got cost, everyday cost, you've got annual cost to run your business, to keep your business from licensing or whatever it may be. So let's compare it that way. That's a great analogy. There's in mutual funds, Michelle, there's two main sets of fees with mutual funds. One is a shareholder fee, and that includes operating expenses. And we'll break them down. You'll find each one of these fees inside the prospectus. We've talked about prospectuses before. Remember, there's that big, thick phone book looking thing with all the attorney language inside of it that we never open or read, and we usually just throw it in the garbage. Well, there's where you'll find all these expenses. And they're required, the mutual fund company is required to disclose these to you. So under shareholder fees that you pay, this shareholder fees is what you pay. So think about this. One is like a sales load. We've talked about these in some of our other videos on mutual funds. They're just like a commission paid to the broker. And they're either broke down into front-loaded sales loads, which is paid for when you purchase the shares, or back-end loaded, paid for when you sell or redeem your shares. Okay. Also, you'll see redemption fees. This is when you sell a fund, there's usually a fee for that. Exchange fees. This is for fees when you exchange one mutual fund for another mutual fund inside the same fund family.
Okay.
Account fees. Fees when your account falls below a minimum level. Some mutual funds have a minimal investment before you can even go into them. And if the account drops below that, that's where account fees could come in and be charged to you. And then purchase fees. Fees you'll see when you purchase some of your funds. These are ones that you will pay as a shareholder. An example of an upfront fee is, let's say ABC Mutual Fund charges you 4 3/4% commission on your investment of $1,000. Okay, so that's $47.50 upfront. This fee subtracted from your initial investment, and only $952.50 will now be invested. That's like your Class A mutual funds. So
sure. Okay. All right. So you mentioned, we talked about shareholder fees. What about operating expenses? Expense fees.
Most of these are annual, Michelle, and they're paid out of the funds. Remember, the shareholder fees is what you paid. Now, these ones here are paid out of the funds. So first off is management fees. You've got a fund manager. There are fees paid to the fund manager for managing your funds. You know, there's day-to-day stuff that they have to do. New money comes in, they've got to put that money to work right away. So they get paid a management fee. Distribution fees. This is also called service fees or 12B1 fees. And we see 12B1 fees more common.
Sure.
And Michelle, these fees are used for covering marketing or distribution of the funds, also ongoing commissions to the advisor that sell the funds.
Okay.
So very common. Other expenses like legal and accounting expenses, they will be disclosed in the prospectus also. And then, Michelle, you take all these fees and you come up with a total annual fund operating expenses. Inside your mutual fund prospectus, also online, if you're looking on Yahoo Finance or wherever you're checking a mutual fund symbol, it'll show you what your annual expenses are as a percentage of the fund's net assets. So it might say, to operate this fund, your average cost is going to be 3.45% annually of your earnings. So,
okay. All right. So here's the question I have for people who are looking to invest in mutual funds. Is there, like, when you sit down, obviously read the prospectus, which you mentioned already, but when you know these fees, like, do you recommend people sit down and like do the math and figure out at the very beginning? You gave us this example of $100,000 of initial investment with a 4% return over 20 years. Here's what it was with a 0.25%. Here's what it was with a 1%. Is that what I guess what I'm asking here is, it's so easy to go, oh, it's only 0.5,
Right.
fee. It's only 1% fee. No big deal. Is that what you do as an investor? You sit down and do the math on like what it's actually going to cost?
I did the math in multiple ways, and here's why. Okay, so one thing I look at is the overall cost, like 3.45% annual. Okay,
Okay.
I have no problem paying that 3.45% annual fee if over the long term of that fund, it's outperformed lower cost, lower fee mutual funds.
I
And
see.
in that
Okay.
prospectus, and checking online too, Michelle, you'll see the history of this fund. How has this fund performed over the 1 year, 3 year, 5 year, and 10 year? And also, you'll see a lifetime chart. So if this fund has, okay, it cost me 3.45% annually, has outperformed the S&P 500 index by 4% a year, I'm still making money by going into this, even with the higher operating expenses. So,
Right. Okay.
so that's how I do it.
All right. Thanks for that. Appreciate it. Okay. Anything else we need to know about mutual fund fees?
Read the prospectus. I know it's a boring looking piece of material that comes, and usually it's just black and white. There's no pictures or anything on it. This is, here's the stuff. Use this, go back to the below this video and use this and look at the differences of the fees and match them up inside that prospectus. Also look at the SEC bulletin that we've attached below this video. That will help you. Pull that out, print it off, and save it as you're doing your research. So
Great. All right. Thank you so much, Brian. If you made it to the end, hit that like button. You have questions, drop them below, please. Don't forget to subscribe. And thank you so much, Brian. And thank you everyone for watching. See you next time.
thanks, everyone.